All right, looks like it's slowing down, so we'll go ahead and get started. Thank you all for joining today. For those of you who have joined our webinar series previously, we're going to do things a little bit differently here today. I'll be acting more as a moderator, and we'll be hosting a discussion with Tom Cronkright and his business partner, Lawrence Duttler. Now, for those of you that don't know, Tom is the founder of CertifID, but he's also the co-founder of Sun Title, where he works with his smarter, better half, Lawrence. So thanks, guys, for joining.
Nice. Yeah. Good morning, Tyler.
So what are we going to be talking about today? Today's topic is how to lead your title company through the COVID-19 crisis. And specifically, we're going to be talking about the Paycheck Protection Program, RON, e-closings, and hybrid closing options, and technology to support new processes during this time of social distancing. So just to sort of set the stage here, Lawrence is really going to be helping us understand everything he is doing from an agency owner perspective at Sun Title. And Tom is going to be providing us with insight based on his communication and connection with, well over 100 agents, large agents from across the country, really in his role at CertifID. So we want this to be really engaging. We've already seen a lot of people ask questions to our posts on LinkedIn and reply to some of the emails that we sent out. There is a Q&A panel. You are more than welcome to ask questions throughout the session, and we will try to address as many of them as we can. Now, before we get started, we just want to do a quick poll. So I'm going to launch a poll here, and for those of you attending, if you could answer, that would help us get started. So the question is, which of these do you most relate to regarding the Paycheck Protection Program? 1, I've applied for the PPP loan. 2, I'm in the process of applying. 3, I'm still unclear about the loan and have questions before filing. And 4, I don't think I'm going to file for a loan. So we'll give you all just another couple of seconds to vote here. All right, great. Go ahead and end the poll so we can get started. So, Tom and Lawrence, it looks like about 33% of our audience have already applied for the PPP loan, while 31% don't think they're going to apply, 20% are in the process of applying, and 16 are still kind of unclear about it. So that is a great segue into our first question. Lawrence, I understand you have already submitted, been approved, and funded your PPP loan. Can you help the audience understand what this process was like for you and sort of how you went through it for Sun Title?
Yeah, it was a constantly moving target, and frankly still is a moving target. We've got some pretty good relationships with some of the larger lenders here in West Michigan, and we got a call from one of them, and they asked if we could almost be a kind of their first guinea pig on this whole thing. So by the time the law was passed, that shifted everything over to the SBA. The SBA is going through their rule-making process. So it was probably Thursday or so where we got the first set of documents, the application form. We filled it out, submitted it. The next day, the form changed, so we had to fill it out and submit it again. Then over the weekend, there was another form, so we had to fill it out. So it's just this constantly moving target because the SBA, in fact, the Wall Street Journal had an article again that they're still trying to figure out all the forms and responsibilities of the lender. So we got our application in and submitted through the SBA over the weekend and got approval for funding on Monday, and then our funds actually hit the account late Monday afternoon. So over the span of a very short period of time, we were able to apply, revise the forms, and get the funding. What's interesting is there's a lot of lenders, what we're hearing is that they've got applications into the SBA, but and may even have approvals back. But as the lender who's responsible for administrating the program and following up on the due diligence that they have to go through the SBA, they're nervous about funding the loan. So they may have an SBA approval, but they're still nervous about their documentation. So in fact, we got a call from our lender who already funded the loan and basically said, hey, there's more documents coming. Even though you're fully closed and you have the funds in your account, we're still going to send some more forms over. And we've got a good relationship with them, so they're not concerned. But it's a constantly moving target, even on the forgiveness side. So the statute goes through, once you get the loan, what's going to be forgiven and the like, but there's a lot of regulations and rules that the SBA still has to come up with, and I suspect that they're going to take the next 8 weeks at least, which is the period of time that there's the look back for the forgiveness, to determine what's the documentation and everything else that you need for these loans. So the calculator of the loan amount, if you pull up the actual bill, it's got the 2.5 times payroll costs. That's how it's defined in the act, and it goes through a number of things. And really, there's 3 sets of calculations you have to do. There's the how much is my loan going to be? That's based on the payroll costs, 2.5 times payroll costs. Then after you get the loan,
let me stop you there. Payroll includes how much?
Yeah.
I mean,
So
Lawrence is being modest. He read the entire CARES Act, the 800 pages. So
I slept very well afterwards.
And developed a whole spreadsheet around this.
Yeah.
So let's be a little more truthful in the sense that you dug deep into this because the lenders it was moving so quickly, and frankly, unlike any other SBA backed program, because remember, the SBA is just a guarantee,
right, no
different than an FHA loan. And what it says is, hey, lender, if you loan money to this business and they default, the SBA will back that guarantee.
Right.
Right.
Yeah.
And that's why this has been just such a hard pivot. But walk through, just dissect real quickly how we came up with the calculation.
Yeah. So the payroll cost, there's the gross compensation. So that's your W-2 wages, commissions, bonuses, anything that's deemed as a compensation to employees is kind of the first starting point. Then you go into what you're allowed to add, what you pay for state unemployment taxes. So that's in addition to the gross payroll amount. Interestingly, you're not allowed to include the employer's share of FICA and Medicare. So it's those kinds of nuances as you're walking through. So it's the gross payroll, it's the state unemployment, it's any health insurance premiums that the company's paying in addition. It includes 401k matches, things like that. So all of those things get added up. Then you, of course, got to come down to the monthly average and multiply it by 2.5. The bill itself says it's a 12-month look back. Some lenders are interpreting that for the last full year, so they wanted to go January through December. For us, it was more advantageous to do April 1 through March 31, and it's an example of how the SBA hasn't said one way or the other. So I think that's when we start talking about why lenders are nervous. They see the 12-month look back. Do they mean 2019 full 12 months? Do they mean ended, for us, it was the end of March 31. And then you've got the timing of the documents necessary to prove it. So for example, all our payroll runs through ADP. So I submitted all our ADP reports, and I can demonstrate through our bank account that the money came out, things like that. The other thing they're looking for, though, are your payroll tax returns. Well, we brought our 12-month look back. I went through March 31st. Well, the quarterly tax returns aren't due until April 15th, right, but we got our funds Monday. So when the lender starts looking at, okay, do I have everything I need in my file, which, by the way, the SBA hasn't told me what I need yet. I've already put the money in SunTitle's account. How am I going to get this documentation, and what does it mean, and that kind of thing. So that's just to start with the loan proceeds, 2.5 times payroll costs. Once you get the proceeds, over the next 8 weeks, you're allowed to use those proceeds for very, very particular things. What you would expect: payroll costs. There's interest on debt, which is pretty broadly defined. There's rent costs, utility costs, a number of different things that you can use the funds for. But then the third calculation is what could be forgiven. So to give you an idea about a nuance, you're allowed to use the funds for interest on pre-existing obligations, but the forgiveness is only on interest on mortgages. So on one hand, you can use the money for interest, but only the interest on mortgages is allowed to be forgiven. And that kind of goes hand in hand with the fact that you can use lease costs are another forgivable permitted use. So they're trying to match up folks that lease property, folks that own property, and that kind of thing. So it's kind of those three applications, or those three calculations. The documentation so far for the program has been shockingly limited. I mean, shockingly limited. It's
scary.
The application has it's 2 pages, at least the last one we filled out. It's basically how much is the payroll that you're getting. You're not a convicted criminal. And then a bunch of attestations that we calculated correctly, we understand that fraud's bad, all the kind of things like that. And then you sign it at the bottom. And that's about it. And then when the documentation came back over from the lender to actually document the loan, there was a Paycheck Protection Program promissory note, 2 pages. That was, so there's almost nothing to that. And then some standard, I would call it loan docs, that kind of thing that the bank kind of threw in for good measure. So the documentation in terms of the loan documentation is pretty limited. I think where the lenders, again, are getting nervous is the documentation that they're requesting back from the company to demonstrate, number one, was the loan amount correct? Are you inflating that? And then, of course, later with the forgiveness. But you can already start to imagine creative fraudsters out there and how that money could be diverted by, if you've got a laser printer in Google, I'm sure you could create some ADP reports and payroll tax reports. So I think a lot of the lenders are focused on customers that they've got good relationships with already, so that there's already a level of trust. I think if you were to go to a lender cold, it might be challenging.
Lawrence, what would you say were the biggest aha moments, or if there was a takeaway that you could share with others in this process to kind of prepare them and help them through? What would that be?
I would say just the uncertainty to the lenders. We've got a great relationship with the loan officer that we were working with, and he would sheepishly come back to us and say, "Hey, yeah, another document change. I'm so sorry," that kind of thing. So really, I guess one of the aha moments I had was just the amount of leading you have to do with the lender to kind of work them through the process, and frankly, a fair amount of grace to give them on the process that they're flying pretty blind as well. So when they come back for more documents or they come back with more questions and things like that, is to kind of keep your own frustration level low. Initially we were, one of the reasons we wanted to do it immediately and really try to get out in front of it was there's such a high demand for it that you worry about the funds running out, and what we're seeing is there's a tremendous amount of applications, but not a lot of approvals yet. So if there's folks out there that think it's too late, it's not too late. I would say if you have an opportunity to apply for this, you should absolutely take advantage of it. The loan itself it has 6 months, no interest, no payments, nothing. There's no personal guarantees. There's no collateral. It's incredible. So worst case scenario, if you're able to get the loan, even if you completely foul up the forgiveness side of it, our loan priced at 1%. 1%
for 2 year note.
2 years, and then you can amortize that, I think, ultimately over 20 years if it's not paid.
Right.
So worst case scenario, you'll have a note at 1% for 20 years. So it's pretty cheap.
That's
capital.
Unsecured.
That's unsecured, by the way.
Now, we're probably thinking a lot like many of you on the call, is that we're not looking for a loan, right? We weren't looking to go into the debt market to put working capital into the coffer, right? We were planning on having our reserves and our own liquidity weather this portion. But once we dug further into it, the question here that was posed, and it's a good one, is what's forgiven? And I think at 40,000 feet, what we understood, if you take all the media noise away from it and you read the statute, what they're trying to do is to say, okay, we're going to go through a rough 8-week period as a country, right? That typically started the beginning or middle of March is when it really started to hit East Coast, West Coast. And we're going to pretend this 8 weeks didn't really happen.
Yeah.
So what we're going to do is we're going to make sure that you're able to pay your people, keep current on your rent and mortgages, keep the lights on so that when you re-enter after this 8 weeks and hopefully all the shelter in places have been lifted, everyone's still there, the lights are on and the furnaces are working, you're not being defaulted on any rent or other obligation, and you continue operations. That's a 40,000 foot kind of view of this. And
the four elements that are forgiven are payroll costs. So there's a definition of payroll costs, and it's what we talked about already. It's interest on mortgages, it's lease payments, and utilities. Those are the four components that can be forgiven. And again, in 8 weeks, we'll see what the due diligence is to prove that that's what you paid, but that's the amount that's forgiven.
Yeah, we have a really good question. What if I'm a sole proprietor? I think they actually contemplated that in the statute.
Yeah, so right now, my understanding is the SBA is taking applications right now for employers that have W-2 wages. If you're a sole proprietor or an independent contractor, it will be a little bit later that you're able to apply. So I absolutely talk to your lender as to the two-stage application process, but the statute specifically contemplates independent contractors and sole proprietors in that same group. There was just an article that one of the senators just put in a bill or a proposal to take the funding from $350 billion, which was already $349 billion, already approved, for another $250 billion. What's interesting, if you do the math on it, the GNP of the United States is about $22 trillion a year. And the stimulus package is at 2-point-some trillion. If they put more money, it could be $2.5 trillion. So they're hedging that even if the economy went down 30% or so over the next 2 months, that the 2.3 trillion up to 2.5 trillion should make up for a lot of that. That's where you get into some of the unemployment numbers and things like that, where folks on unemployment get an additional $600, kind of a flat. From what I can tell from the statute, it's a $600 on top of your state unemployment. So however your state calculates unemployment, they just flat out add $600 to that paycheck, which I think a lot of employers are concerned. I know I've got friends in the restaurant business where you've got folks that are going on unemployment and they will make twice as much money on unemployment than they would coming back to work. And right now, there doesn't seem to be a lot in the statute that would suggest that there will be a pullback from that. So when this thing does recover and people are looking to get those employees back, it's going to be interesting to see who's taking advantage of the new marijuana laws in Michigan and the like, right?
Lawrence, incredibly insightful. That is great stuff. We still have a couple questions, but we're going to segue into our next segment, and then we'll hopefully answer any other questions that remain regarding the paycheck protection at the end. So our next segment of today's webinar is all about Ron. So we're going to take a quick minute for one more poll question of the audience. And here we go. Which of these statements do you relate to most regarding Ron? I am already up and running with a Ron solution. I am in the process of vetting Ron software. I am still trying to learn about how this works. I'm trying to avoid Ron at all costs.
Right. Great.
I love that one.
Yeah, that's a good one.
I'm sure if people could select two, they would also.
People probably want to select a couple of boxes, right? Yeah, I've already applied, and I'm also trying to avoid it at all costs.
Right, we'll just give it a couple more seconds here. All right, I'm going to go ahead and close up the poll, and I will share the results. It looks like the biggest portion, 40%, in the process of vetting Ron software. We got another 33% that are still trying to learn about how it works, 20 who are up and running a solution, and 8% that are trying to avoid it at all costs. So with that, Tom, I know we've had a lot of customers of ours at Certified, and even your email blowing up from underwriters reaching out to us to try to talk about sort of Ron and hybrid closings. It seems like there's different requirements in every state, and now these executive orders are coming in to sort of fast track Ron. Can you help the audience just make sense of what is going on?
Yeah, so as Lawrence was trying to figure out the CARES Act, I was spending weekends reading all of the executive orders around the country to get a sense of what really is
I got a better side of that deal.
Yeah, I think you may have. Mind-numbing. So there has never been, I think, a topic hit the market or this industry so quickly as what Ron did. And Ron just kind of snapped into full view about 2.5 weeks ago. Essentially, there's three things that you have to really get your head around to figure out what your next series of moves are. And I'm going to use the word series because I don't think it's just one right now. Most states, if they have some type of a remote online notarization statute in place, they have adopted what's called the MBA Alta Model Act. Some are referred to as the NAIC Model Act. But essentially, everyone got together and said, okay, if title companies, if you want to close these and we need to be able to sell and service these on the secondary market from a mortgage lending standpoint, we have to have a voice in this. And most states, I forget the exact number, have either fully passed or passed but not yet made effective their version of the Ron legislation, okay? Most of them, just know, require the use of a platform that's pre-approved by the state. And what we found is that platform doesn't separate the functionality or the activity of a remote online notarization from an e-closing. Fair? That's one of the ahas that we had. So the challenge there just can't, so let me go through that first. That's the Ron Model Act. Secondly, there was a kind of a makeshift federal legislative bill that has been proposed that would make lawful across the country Ron closings, okay? That is within the spirit of the Model Act, but a little less restrictive from that standpoint. And then the curveball that continues to come in is state by state. You've had the bar associations, you've had the land title associations, and you have had the mortgage banking associations approach the governors and say, look, we still have to have the notarial duties and acts activated, but how do we do that in light of shelter in place and social distancing requirements that in some cases like Michigan is a misdemeanor crime if you violate them. Right. So now you're taking the notary out of the face-to-face by law and saying, look, if you're non-essential, then you have to figure out another way. And the governors, and I'll be very candid, they just basically said, for the most part, whatever you're doing in the closing room, you can go ahead and do over a recorded online session. But what quickly developed in that was the underwriters and the mortgage banking association saying, look, that's not good enough for us to be able to ensure from a closing perspective of the underwriter and to be able to sell and service on the secondary market once the loan is closed through this type of remote online notarization signing. So at best right now, it's a box of chocolates. I think what you really have to do is look at, one, has your state adopted the Model Act? And then quickly pivot to whether or not there's a proclamation, there's an order, there's some type of a gubernatorial message, or a lot of them are doing it under the disaster or the crisis response to COVID, that they're loosening up the reins there. But this is a significantly important moving target right now because we have to get the loans closed. We have to get these deals done.
So Tom, what do you think the underwriters are most worried about, or how should title companies be thinking in order to make sure their policies will get underwritten?
Yeah, so here's some themes and some questions that you need to ask, or some takeaways where you need to really focus on. One, the underwriters, first and foremost, identity verification and security. So now I don't have the luxury of even 5 minutes face-to-face with somebody. I have to rely on this distancing socially through technology, and we're relying on a driver's license that's held up to a camera and documents that may be shown after they were signed. How do we know they weren't altered or doctored up or something like that? So I think identity verification and security. The other is legal compliance. Will the Register of Deeds, this is a very important one, guys. Big disconnect in the Register of Deeds. You have to understand county by county, will they accept a digitally signed document? And if not, you're back to papering out the whole thing, getting wet signatures, and probably back to your notary statute for compliance. Wouldn't you agree?
Yeah, Michigan's a good example. So we've got the Ron Model Act passed.
Yep.
But within the act, there were basically two major statements. One was the fact that the Secretary of State, who oversees the notaries, has to come out with regulations and rules and things like that for the registers of deeds on how to evaluate them. But at the same time, the statute said, regardless of that, registers of deeds, you have to accept this if you e-record. So what you have is you get into these registers of deeds where someone's worked there for 30 years, they don't understand the statute, they're waiting for regulations from the state, and they'll refuse to record the document, even though the statute says you have to record the document. So you can only do these in counties where they e-record. You got to make sure that the staff at the Register of Deeds will accept it. So there's a big disconnect there. And, the other side of it is just state law on the promissory notes,
Yeah, the promissory notes, the other legal compliance, some states, even under the executive orders, require you to provide notice to the state that you are going to be performing notarial acts through a digital or distance remote platform. So that's another one when you talk about legal compliance. You got to get into the weeds a little bit to make sure that you're checking all the boxes that it can't be challenged later. Underwriter approval. So we've seen a lot of underwriter bulletins over the last 7 to 10 days. They've been somewhat inconsistent. I think they're doing their best because each state has a little bit of a different framework on how they're approaching this, but making sure your underwriter approves. The one that isn't being talked about that we really need to think about is our insurance company and our E&O. So we have very specific requirements in the triggering of coverage in those covenants on how our notarial and our witnessing duties are performed. And if we go outside of that, I would simply be letting our insurance carrier know this is what we're doing and have them write back to us that, yep, we're approving this format right now for the time being while we're in shelter in place. Give yourself some cover on that. And then the other big one is the mortgage banking industry. So the governor can say whatever they want. I think everyone would agree on the call that up until now, Ron was much more of a lender-driven issue than it was the title industry really trying to grab hold of this and distance everyone. But the mortgage banking industry, if anything, we're seeing a little bit of a hesitation to fully lean into this because I think of the ricochet of 2008 through 10 where we had all of the mirrors and the mortgage mods that had to take place. So again, there's a party constituency that has to line up before you just start firing up a Skype and having somebody sign documents remotely.
Lawrence, you spoke a little bit about what's going on in Grand Rapids and Michigan specifically. How have you at Sun Title decided to approach this Ron issue?
Well, I think the RON issue, we felt like we had to get set up on a platform to do the RON. If for nothing else, it's accelerating that opportunity. The challenge that we're having with RON, though, is again, getting back to these disconnects. The RON only works if you've got state law and the like lined up for the promissory note. That in order to do a fully RON closing, you have to make sure that the lender is participating in some type of what they call an e-note program. It kind of reminds you a little bit of MERS going back to the 2008. Remember, MERS was the Mortgage Electronic Recording System. That idea was about assignments of mortgage. So rather than recording mortgages over and over and over in the Register of Deeds, you would use MERS to kind of do it behind the scenes. The RON issue with promissory notes is very different. A promissory note, just really quick, goes back to English law, way back, where you have an original promissory note. So whenever you sign a mortgage, do a transaction and you sign, one of the key documents is a promissory note. It's not notarized or anything like that. It's just signed by the borrowers. But it's called a negotiable instrument. And it's treated like that under what's called the Uniform Commercial Code, which is pretty much across the country, state-driven, but it's the Uniform Commercial Code that everybody follows. And so this promissory note, being a negotiable instrument, is looking for that wet signature on the ink, because there can only be one original. I was thinking back, if you ever seen the Scrooge movies, right? He was walking around with this little book, and he would put people's debts down, and they'd have to sign it, right? Well, that's what we're hearkening back to. It's like the 1800s, where you don't have a book anymore, but you got this original promissory note. So the question is what do you do with this supposedly original note? So there's this thing called e-vault that some of the lenders use, where you electronically sign the note and it goes into what they call this e-vault. It's a complicated system, but the idea is it goes into there and it's considered an original. But most lenders are not signed up for e-note. So what does that mean? That means all of these RON closings, with the benefit of being completely distanced with no interaction, doesn't work, because at the end of the day, I've got to send the note to the borrower, have them sign it, and send it back. So there's still, despite all of this talk of a remote online notarization, you still end up with a document that needs to be signed with a wet signature and sent back. So that got to be challenging. So when we were looking at that, we're going down the road with Ron, and we're hooked up with a software vendor that does it. If any of you have already signed up for it, you can see just how challenging some of these systems are. I'm not sure the folks that created the systems were title people and understood how this all works, but they're challenging systems, to say the least. What we ended up doing, though, is looking back at our current state statute for public notary acts. And it was actually a little bit surprising that we can do things that we didn't really think about before, that really weren't asked for under the current act. So I'll give you an example. Under Michigan law, there are two types of notaries that you do. When you're a notary and you're signing someone's signature, you're doing one of two things. One is called, again, this is under Michigan's act, but many of the states have the same act. You should look at yours. But under acknowledgments, I am simply acknowledging the signature. So that means that someone can sign the document outside the physical presence of the notary. Ultimately, when the notary goes to get the document, they can say, look, I signed that, that's my signature. So that's called an acknowledgement. So it doesn't have to be signed in the physical presence of the notary. The other type of notary is what's called an attestation, more of an oath. So if you look back into a loan package, one of them might be the name affidavit. So you've got your name at the top and all the different names that you went by, all your aliases or whatever you happen to be, right? And the idea is now I'm attesting, I'm taking an oath that everything in this document is correct. So that has to be signed in the physical presence of the notary. The pen has to go to paper while the notary is watching. Well, if you look at a standard loan documentation or any standard document set in a transaction, there's only a couple documents that require that higher level of in-person signature. It'll be a surprise to some people. Most deeds, mortgages, those are acknowledgments, not attestations. So we came up with what we're calling remote mobile notarization. So the idea is it's still a completely physical package that gets sent to the person signing. So you overnight the package to them. You create a go-to meeting, something like that, and you walk through the package with them, and they sign virtually every document in the package. Because, some signatures don't require any notarization. If you look at the promissory note we talked about, you look at the government forms, things like that, they don't require any notarization. So they just sign all those as you're walking through it in the video. The next thing is the acknowledgments. They can sign those while you're having the video chat. And then you just simply highlight the two documents or so that require the attestation. And then you have notaries roaming around. They go to the person's house. You set a time to pick up the package. And then whether it's through the door, through the window, through social distancing, you watch them put those last two signatures on the documents. And then they say to the notary, all these signatures are mine. That covers the acknowledgments, and you're off to the races. So you're not passing the documents back and forth. There's one transmission of the documents back. So why is that important? One of the challenges that we're having is the lenders are not able to change their process and procedures as fast as what we need to in this 8-week period of this lockdown. So they're trying to catch up. So the question is, well, what can we do to still maintain social distancing, but yet allow for the physical package? Because from the lender's perspective, the way I just described it, where I send the package, we sign everything up, we notarize, it's fully compliant with call it the old Notary Act before it was amended to account for RON. So from their perspective, they're getting a fully wet signed package back, fully and compliantly notarized, and it comes back to our office. So it was a way that we developed that we could still sign all the documents. Some of our clients really like it because in Michigan, and I think most of the states, the real estate community was deemed non-essential, right. So they can't even go out. So the question becomes, well, if I'm a realtor, how do I participate in the transaction? Under most of the RON platforms, it's only the notary and the signer. There's no opportunity for anybody else. Well, with a remote mobile notarization, we call it RMN. With an RMN, it's a go-to meeting. You can invite the lender, you can invite the realtor, you can invite anybody you want. Now, everybody gets to participate. They can answer questions, they can talk to each other, they can do all these different things. It feels a little bit more like a regular closing. And our clients love the relationship aspect of it. So under the RMN program, it kind of get the best of both worlds. And because it's fully compliant, the lenders don't have to change anything. When they get the package back, it looks just like a regular package.
Yeah, and we're not under an executive order in Michigan, so it's really important to note this, that if your state does have an executive order, you may have the ability to even avoid the need to pick the package up.
You're talking about a notary executive order.
I'm talking a notary executive order, where now the governors are saying, look, if you witness their signature and you have that recorded, they can send that document back to you. Most of them require it to be sent back the same day or next day. And then you're able to basically ascribe the notary, you're able to finish the attestation as if you were present. And then the executive order says, you know, they basically say this is in replacement of in-person contact or communication.
And that brings up the challenge, right, is that the governors don't know how the title is, shockingly, right? They don't understand title. They don't know what we do, right? So they're passing these orders, and they don't understand that at the end of the day, the underwriter's got to agree to it. So the underwriters might see this executive order and say, look, I don't care what the governor says. You've got to have some in-person contact. And I think it's important, as much as I'd like to believe that we're the most important industry out there, even with these notarization statutes, it's designed for all notarizations, right? It's designed for notarizations for attorneys and estate planners and banks and all these different things. Title is just a blip on there, and they don't understand how our industry works.
Yeah. No, I love it. Apologies for those of you still on. You know, we are running a little late, but we figured that today was really important, so we're going to continue to roll on through.
Yeah, Lawrence. I want to answer two questions that came in, Tyler. One was in Georgia. Again, the hybrid is you witnessing. Again, if you're able to do this under the executive order, witnessing the signature remotely, and then having the ability to ascribe to complete the jurat with the notary signature and seal as if you were present. That's the hybrid right now.
Nuance, yep.
That's the nuance. Somebody had mentioned, is the iVault technology similar to blockchain so that it's tamper-proof? We can't speak to that. The nice thing about this, guys, if you really want to go full RON, you have to get with your key lender customers. They have to set up their own iVault. They have to digitize the documents that they have, and essentially they would, in most cases, we learned, set the order up and then pass it over to you as title and settlement to then affix your documentation, your closing agreement, the final closing statement, whatever it is, and then that ends up being the full doc pack. So,
well, I think it's important that we remember RON, one of the biggest purposes of RON had nothing to do with social distancing. It had nothing to do with, as much as they might talk about the fact that millennials are really into this idea of remote closing. That's not what's driving RON. What's driving RON is if you do a fully RON closing that has the promissory eVault, so that you're recording the documents within 24, 48 hours, all of these different things. That allows a lender who's selling that loan as part of a portfolio, it advances the sale of that portfolio by 2 to 3 weeks, right? So that's what's driving Ron. By doing a fully compliant Ron electronic closing, a lender is able to sell that loan 2 to 3 weeks earlier. Why does it matter? It's the cost of money. It's the time value of money. They avoid paying the interest and the cost of reserving that capital for 2 to 3 weeks. They can redeploy that capital much quicker, and they're getting a much quicker return on it. So that's what was driving Ron. And that's why the lenders were a little bit hesitant, because title companies really weren't asking for it. Borrowers really weren't asking for it. It was kind of a, I don't want to call it a money grab, but it was kind of a money grab, right? The idea is that if we get this right, we can sell them 2 to 3. Well, now we're trying to jam this social distancing into the Ron program. And it's way more involved than what you can do typically in 2 to 3 weeks.
Well, and particularly if you do commercial, if you do construction, there are split closings, there are edge cases that we found, because we have been at the deep end of the pool on this the last 2 weeks as we went into shelter in place. Just make sure you're really thinking about your workflow and the full transaction profile that you have across all deals. Because we didn't see it as a one-size-fits-all, at least to start.
Yeah,
we're going down the path.
Yeah, and that's what I loved about what you guys really came up with, was this, what you called the remote mobile notary solution. So, I mean, we even, Tom, you and I have been noodling at this about CertifID of, could we actually create a product to help facilitate sort of a hybrid closing, if you will, where it would take the benefits of CertifID and the full identity verification to ensure you're actually following necessary measures to protect the transaction and meet the requirements, but then just start a video chat that would enable you to watch the wet signing of the document.
Our question was simply this. Lawrence and I, we had our whole team. We worked around the clock the weekend before the shelter went in place. We kind of had a tip that it was taken, that it was going to go down. And we said, well, what if, right? What if we could develop a platform, and we'll talk about how CertifID interacts this, but what if we could develop a platform where we had all the security, we had all the trust, but we took the closing experience in person and we just simply moved it into a digital landscape where everyone could benefit. Maybe you can speak to what the customer and our referral partner response has been.
Yeah, it's been it's been shocking how quickly it's been accepted. I think if we had tried to roll out an RMN solution 6 months ago, I think there would have been more resistance and a little less interest, obviously, because I want to see my client, I want to show up with my client, that kind of thing. But now that we've got this requirement in place, all of a sudden this technology of being able to do this closing still with a physical package. But the beauty is, if you use the right platform, not just the notary and the borrower show up, but all the parties to the transaction can show up. Right. And so that, as you know, if your client base is anything like ours, our realtor clients, they live and die by referrals, and that closing experience is a big part of it. Same thing with lenders. So we're seeing this as an opportunity, not just while this shelter in place is going on, but we're seeing this when everything turns back to this new normal. We're going to continue to use this because it's a time saver. It kind of it scratches the itch of, if it's truly the millennials and others that are tech savvy that want to do that, it's an opportunity to still do that. Again, lenders don't have to change any of their programs. I don't have to do anything different with the Register of Deeds because it's all wet signed signatures. I don't need a special executive order from the governor. In all likelihood, your notary statute in your state follows this exact structure. So you can do all of it at the same time. The only caveat we've had as we go through this is any concern about the identity side. So how do we incorporate some type of identity verification into our system so that when they get the video link, they're able to confirm their ID, because you can hold your driver's license up, and that's certainly part of it. But we've all seen the frauds out there with fake IDs and all this kind of stuff, and it gives all of us anxiety as we're paying off these large mortgages and the like. So how do we take this idea of using our ancient notary statute, our ancient Register of Deeds, wet signed signatures, but then adding this technology component to it? And that's where I think we came up with what we're removing.
Yeah, exactly. So we're enabling.
That's a great segue. We're actually going to launch a little poll because we've been noodling this at CertifID. Exactly what Lawrence just mentioned, we'd love to know what you all on the line think about a solution like that. So if a hybrid closing solution were available, essentially a wet signature over secure video chat, that you could have full identity verification, is this a solution that you've already implemented, a solution you might be interested in using, a solution I would use right away if it were available, a solution that does not feel like it would meet your needs, or I still don't understand how this would work? And we'll just give a couple more moments here. And great questions coming through. Really appreciate all of the interaction from the audience. It's been fantastic. All right, so we'll go ahead and end the poll right there, and I will share the results. So it looks like we have about 37% that said a solution I might be interested in using, 34% said a solution I would use right away if it were available, and then about 18% that have already implemented a solution like that. So that's great. Looks like you guys are onto something there, Lawrence and Tom.
Necessity is the mother.
Hey, nothing like a good old-fashioned pandemic to get you to innovate.
The wheels rolling.
That's great.
All right, we're going to do a little bit of a lightning round here to try to close this out. We'll try to fire through some questions that we had gotten previously, and then continue to answer any more questions that come in. So we've obviously covered PPP. We've covered Ron, two of the hottest topics in the industry. But I want to ask you a couple more. So Lawrence, Michigan was one of the first states to go under shelter-in-place requirements. How has that affected the business at Sun Title?
You know, I would say for deals that were already in the pipeline, those continue to close. They're using our RMN solution, so they love it. The feedback we're getting from customers and clients has been really, really positive. So easy to use. They understand the why. They love the ability to participate. So the ones that were already in process are closing: purchase transactions, refinance transactions, that kind of thing. You know, with the lowering of the interest rates, we had already seen a huge influx in refinance transactions, and frankly, we were about to go into this April market with all the purchase transactions coming online, with all these refinance transactions. So it was a bit overwhelming. The shelter-in-place went in, and we have seen, as you can imagine, a significant drop on the purchase side. So in our state, and I think many states are the same, the realtors are, because they're deemed non-essential, they can do video showings and things like that. But you know, if anybody's bought a house, you want to walk through, you want to touch the countertops, you want to see the house, right? So the number of purchase orders that we've seen has come down dramatically. They're still trickling in. You know, I think if anybody goes down the expressway of a state that has a shelter-in-place order, you're wondering how all these people are essential services. I got passed by a mole buster's car the other day, so apparently that guy is an essential service right now. So I think we've got a lot of clients that are looking at it saying, look, I know I'm not essential. I'm not supposed to go out, but I've got a buyer that wants to see this property, and I'm going to show it. So there's a little bit of that going on, I think. So we're still seeing some listings come through the multiple listing service. We're getting some of those orders, but largely it's been a tremendous shift into the refi side, which in itself has its own challenges, whether they were in process or new. We're seeing more documentation coming through in the closing package, where the borrowers have to sign an affidavit that their employment hasn't changed, that they're still receiving the same income, that kind of thing. But for the most part, the refinance business has continued to be strong. Again, it's the hard part, I think, is trying to move people to more of a digital platform. We still have closings in the office, so we've got a lot of protocols in place in terms of how visitors are welcomed into the office, and everything's cleaned down when they're done, and the questions you ask when they walk in. And you know, you don't want to walk into the office and cough, right? And of course, it's it's allergy season in Michigan and everything else, so you know, everybody's pretty hypersensitive to it. But that's probably been the biggest impact, I would think.
Well, I would say the opportunity.
Tom, what about you in terms of what you've seen via CertifID? So as far as, you know, people's willingness to adopt new technology during this time of social distancing, and sort of how they're thinking about security, what is your sort of insight from that role?
Yeah, I think it was an immediate wake-up call as we had to move our teams, as companies move teams into the home. I mean, once school shut down, it was an immediate need there, and then the shelter-in-place rolled in. So I think there was a much more kind of acute lens that was focused in on the security of the infrastructure of the company, how they're connecting, what devices, updates, things like that. But then, if you've looked at recently, the Better Business Bureau, the FBI, the FTC, Secret Service, everyone's put out bulletins around social engineering, business email compromise. One of the biggest trends that we're seeing develop, unfortunately, is cash out refinance wires that are being diverted. So as we have one of the biggest refinance cycles since the early 2000s, and then again between 08 and 9, we've got called in to help in several where you think you're paying off after the rescission, the however much they're taking out in equity from a cash out, and it's actually a fraudster that somehow infiltrated the communication and is redirecting the wire. So be very careful about that. In our business, just to speak to Certified, and I think with anybody in information security right now, we had just a flood of people looking at it saying, okay, the last thing we need right now is a wire fraud amongst all the other stressors that we're trying to develop. So we've been having a really good influx from a customer standpoint.
Lawrence, what about you? You mentioned the use of technology to help you with these remote mobile closings, but has there been any other sort of technology that has helped you kind of cope with social distancing within your own business?
I think it's been a combination of things. So, one of the challenges that we're always concerned about is this email compromise and the like. So we've been using GoToMeetings and things like that in order to transmit that. But that's one of the things where we've been working closely on this certified solution, where we can start embedding those links and such behind a system that verifies the identity and everything before we even get started. So from a technology standpoint, it's we've been fortunate. The title is not exactly one of the fastest technology adopters that you've ever seen out there. But my staff, as they're looking at this whole thing, it's been amazing how quickly they've adapted to these digital, video closings, looking at more opportunities to verify identity, things like that. So I think it's been kind of a light speed jump into more technology acceptance, just out of necessity.
Got it. We just had a question come in around.
There was a question on the Paycheck Protection Program that if you have multiple entities, do you apply for one or each separate entity? As we understood it going through it, it's strictly payroll record driven, right? So it depends on where, if you're leasing, maybe you can take.
Yeah, there's some exceptions. So the general rule on the program is you have to have less than 500 employees. And they really don't get into where those employees are located or anything. It's a very broad test for payroll costs, but you got to have less than 500 employees. Where you start getting into location and branch questions is if you have over 500 employees, but they're at different locations, different areas. Then there's a whole nother analysis that you can do to demonstrate that even though I've got more than 500 employees collectively, I have less than 500 employees at these various locations, and then there's ways to apply for it there. So that's where you get into the branch area office locations. But it's another example of the challenges that the bankers are trying to figure out is how do I do that? I know I've got someone applying for a loan. They've got 1,500 employees. They're giving me evidence as to where they're located, and the SBA is just like, we're not sure yet.
We just had another one come in that says, my worry with RMN is that if you are getting random mobile notaries, they may not be comfortable notarizing documents they didn't actually see the signatures. Have you ran into that?
We haven't. I think I think most of us. It depends on your geographic area, right? So we're in West Michigan here, so we do most of our closings on the west side of the state. We've got good relationships with mobile notary companies that have multiple notaries within them. So we made sure to communicate to them how this works and why it works and that kind of thing. So there can be a little bit of education in advance that you can do. I think if you get a random notary that is not told how this is going to work, I think that's challenging. But I think you'd have to communicate to them anyway. If for no other reason, when we contacted the notary companies that we work with, we explained to them that, hey, this isn't going to be a full sit-down notarization of a closing package. So it's not going to take you an hour and a half. It's 5 minutes in the driveway. So if you were charging me $100 before, it's $50 now, and they're welcome for the business because their business is slowed down. So I think there's a twofold conversation that you're having. Is one, let's negotiate these prices a little bit because you're not doing the full package, but also, hey, this is how it works. This is why it works, and so forth.
But I think for us, we were way ahead of the communication. So bringing the lender, bringing the real estate broker and agent, bringing, if we have to third party out and use a resource like that, as long as you kind of dissect why this is compliant in a way that this works, we haven't had any pushback. There was a question on the PPP. Is it forgivable, or is it if the debt is forgiven, is it taxable? And I think you found specifically in the statute they would not.
The forgiveness of the loan is not taxable. Correct. So I'm a recovering lawyer and former CPA. So I was walking through my mind with my controller on how we were going to book this thing, right? And it's a book to cash and a book to loan. But when they forgive the loan, it's going to be weird, right? We're going to reduce the loan amount and it's going to go into equity. It doesn't hit the income statement at all. It's just, it's bizarre.
Crazy.
Hey guys, well, this has been absolutely fantastic. We're about to hit the top of the hour. For those of you who joined, we really appreciate it. Hopefully we were able to answer all of your questions. We did see quite a few come in around our hybrid closing solution and how we're sort of thinking about that. Feel free to reach out to us if you're interested in that, or if you're just interested in finding out how Certified can help protect you from wire fraud, especially during these times of social distancing. You can reach out to myself or Tom, or direct it to our channel at sales@certified.com. We really hope you enjoy the conversation. And Lawrence, thank you. We really appreciate your time and insight. It was awesome to have you on today.
That was fun. Yeah.
I want to underscore one thing, Tyler, before we wrap. I think if anything that we've learned, and look, guys, we're human like everyone else. We have employees that have good days and bad days. There's so much change that took place in such a compressed amount of time. This was nothing like 2008. I mean, we were able to grow the business through 2008, but this has a whole different framework. One of the things that we did find is that our team, our referral partners, even people that maybe weren't doing business with us that maybe now, they were just really, they're wanting honest communication about what's going on and how we're reacting to it. And I think don't underestimate your impact or your voice within your marketplace of how you're thinking about things and in what you're doing in response, and be humble enough to get feedback. When we were approaching RMN, we asked the underwriters first, hey, confidentially, we need to show you something that we're about ready to launch in a few hours, and we need we need your blessing on it. And the same thing for customers, because I think the companies with the grit, the companies that pivot to solution, the companies that are really clear-headed and are looking to execute in ways that make sense not only for now, but some of the things that we've developed going forward, both in Certified and the Sun Title operation. I mean, I'm not saying that this is a horrible tragedy globally, but I can tell you from the seat that we're in right now, we've had a lot of learnings in a short amount of time. And I do think the way business is done going forward is on a different path. And it's on a path to more efficiency and more tech adoption. We're proving that we don't have to be in an office right now, and the work's still getting done and the orders are coming in. So I just wanted to underscore that. That's what, and I don't know if you want to add anything to that.
I was joking with my family. I was just excited that we were identified as an essential service. Nobody knows what we do or how we do it or what role we play, but we're essential. At least we're essential. We've known it for years, but it's nice to get the U.S. Treasurer or U.S. Treasury Secretary to say you're essential. It's like, thanks. Now just tell them what we do.
I love it. Well, thanks again, guys. Really appreciate it. And thank you all to join. We'll be posting the recording on our site if you need it. And have a great day.
Thanks, guys.
Thanks, guys.
Take care. Be safe.